Welcome back. For those of you watching the market, specifically the VIX, the volatility index intraday, you may have noticed we had a pretty big spike up today, hitting highs of 1708, closing for the day at 1538, which leads us to one of two conclusions: either a pretty fun day trading strategy, or perhaps an indicator that may show signs of a big market reversal. We're going to discuss both possibilities. Now, the VIX, the volatility index, again, this is shown in white below the white histogram bars. It is a measure of the premiums on the S&P 500 options, specifically the options that are set to expire the soonest. And now the VIX, the way it works is it acts as a fear gauge. It goes up when the market goes down because traders will use options to hedge their long-term positions by selling covered calls or buying protective puts. When the markets go up, traders tend not to use options as much. But when it goes down, or if there's a fear of the market going down, the premiums will rise. We can see the red line, the S&P 500, as we hit a pretty significant low October of 22. We see the VIX hit levels up near the 35 level. But recently, we've seen a very low VIX, sub 15, actually down into the 13s. Today, again, we hit highs just above 17. Now, I know we closed for the day at 15 or so, but I thought it might be a really good opportunity to discuss what would that mean if we see a VIX at 17. And the intraday action may be a sign of something to come. Here we look at 2017. Now, the white line in this case represents the daily point change, how much the VIX went up or down for one day. If it went from 15 to 16, it went up 1 point. Well, we can see going back to the left-hand side of the chart, specifically around September of 2017, the S&P 500 enjoyed a very steady, quiet trend to the upside. The VIX was very, very low. It went up 2 points on September 5th, 2017. Other than that, it was in a very quiet trading range. It did not go up or down more than 1 or maybe even 2 points for a long time. From September of 2017 all the way through January 29th of 2018, the VIX did not go up more than 2 points. On January 29th, 2018, it went up 3 points. At that period of time, we can see the S&P 500 had a very big high near the 2,900 level and then showed the first signs of, well, what could be a reversal. It ended up, in fact, turning out to being a very, very big reversal from 2,850 down to 2,600 in a very, very fast movement. At that time, the VIX spiked higher, going up in one day on February 5th, up 20 points on that one single day. So to look at that and say, well, the VIX is up 20 points, well, unfortunately, you're a little too late. But noticing the VIX was up 3 points the first time it had been up 3 points in 4 or 5 months, that could have given us a clue. In fact, about a day or so later, on February 2nd, it was up another 4 points. These intraday movements, and these are the closing prices, but the intraday movements are sometimes very important to watch, because if we have a certain idea of what we're looking for in terms of a VIX spike up 3 or 4 or 5 points, that could lead us to what could be a big reversal. In this case, it very much was. Now, 2018, it was the same type of chart pattern. We go back to June, July of 2018, the S&P 500 at 2,700 level, and it rallied up to 2,900 and change in October. So a couple hundred points in a couple months, that's a nice rally. During that period of time, notice the VIX did not go up more than 2 points. It went up 2 points on August 10th. It went up 2 points on September 17th. But finally, it went up 3 points on October 4th. Now, it doesn't mean that every single time the VIX goes up 3 points, it's a sign of something to come. But after several months of the VIX being very, very quiet, not going up more than 2 points, all of a sudden it goes up 3 points. Well, at that period of time, the S&P 500 woke up. or I should say the VIX woke up as the S&P 500 rally soon came to a close. 2,900 very quickly became 2,600, and then after that led down to 2,350. For those of us watching the stock market, not really paying a lot of attention to the VIX, we may say, well, the market fluctuates, our investments will go up and down over time. But if we want to peel some profits off the table, this is one way to do so. Watch the VIX very carefully after it's been quiet for a long time. The reason why we're talking about today is because the VIX has been very quiet for a long time. Now, it only closed up a point today, but intraday, it was up almost 3 points. That's why we're talking about today. Well, fast forward to 2019. Now, 2019 is a very unusual situation, that COVID stock market crash that happened seemingly all at once. Rewind, going back to October 2019, the S&P 500 was around 2,900. 2,900 in October turned out to be 3,400 almost in February. S&P 500 was very, very strong. And during that period of time, the VIX, understandably, was very quiet. It was up 2 points on October 8th, 2 points on December 2nd, another 2 points on December 9th. Now, it doesn't mean 2 plus 2. It means it went up 2 points, and then the next day it probably went down 1. And then the day after that, it went down another point. So it pops up and then settles down, pops up and settles down. Well, until we saw a little bit of a warning sign, the VIX was up 4 points on January 27th, 2020. The S&P 500 started to crack a little bit, settled back down. It was up another 3 points January 31st, then settled back down. But we should take this as maybe a little sign of concern. After several months of a very steady stock market and a very quiet VIX, why is it all of a sudden popping up 4 points and 3 points? Well, eventually, that VIX went up 8 points on February 24th. That's when the stock market cracked. You really still had, knowing, if we had known what was about to happen February 24th on, you still had a good chance to get out some stocks, at a very good price, 3,200, because the S&P 500 went down to 2,200 by March 23rd. Of course, it's a very unusual situation what happened, first quarter 2020. Not to say that we're predicting the next occurrence like this, but the first warning sign, not even knowing what was going to happen, was when the VIX was up 3-4 points about a month prior to that big stock market sell-off. Now, if we were to wonder, well, what does the VIX look like when it goes up at least 5 points? Where does that occur on the chart? Well, this is a long-term chart, the S&P 500 going back to 2015. The red line is the stock market, the S&P 500. The white histogram bars note those moments when the VIX is up at least 5 points on that day. Now, there's two takeaways from this. Number one, it can be the sign of a big reversal, something to come. Number two, it can present us with an excellent day trade or even swing trade opportunity where the market sells off but then resumes its uptrend and we get in at a very low price, buy low, sell high. We'll discuss both, in just a moment. But take a look going back to 2016. You had the VIX that was up 5 points, at least 5 points during that period of time. That's June 24th, 27th or so. The S&P 500 was at 2,000. It had sold off from 2,100 down to 2,000 in a couple of days. And then all of a sudden, it was right back up there, 2,183. That was a beautiful little swing trading opportunity. Fast forward, it was down 5 points on February 8th, 2018, 2581. Well, in a short period of time, it was back up to 2765. These white lines in a strong uptrending market represent excellent buying situations because it shows us if the VIX goes up at least 5 points, it shows us the market sold off. And if we have faith, if the rest of our fundamental and technical analysis tells us the market's still going up higher, well, this represents a very low price for us to get in at a bargain. Fast forward to present day. Notice the VIX has not been above 5. It has not gone up at least 5 points since June 13th of last year. Now, for those of you that watch our bond videos, you'll know that June of 2022 represents something very special. It's the beginning of the inverted bond market. Is there a connection? I don't know. But the beginning of the inverted bond market marks the beginning of a very quiet stock market. Maybe the stock market's kind of confused. That's why it's not really going anywhere. But needless to say, that was the last time the VIX went up at least 5 points on that day. Now, this is one approach where we buy low, sell high when the VIX goes up a lot because it shows us a temporary entry into an uptrending market. But of course, when the VIX goes up 5 points, it could be the beginning of a downtrend. How do we know which it is? And that really is a $5,000 question. Well, I don't know that the VIX is going to tell us that, on its own, but that's why we would leverage other technical and fundamental indicators, many of which we discuss here, to try to get a better understanding. Is this just a temporary dip, or is this the beginning of a long-term trend to the upside? Here is present day. The VIX, again, only up around 1 point for today. But again, intraday, it was up almost 3 points. Now, because it did not close up 3 points, it does not technically mark a sign of concern or a great maybe opportunity to get involved to buy low. If you think that it's oversold, maybe it is, but it should at least catch our attention. We're going to watch the VIX tomorrow. We're going to watch the VIX every day in the near term future, because if we start to see days that the VIX is up 3, 4, 5 points, it represents an opportunity either to buy at a great price in a strong uptrending market, or maybe to warn us of something else to come. Here is the VIX present day. Now we see again, the VIX is only up around 1 point today, but we see that during the past several months, in fact, going back to October, with one exception where the VIX was up 4 points, and it wasn't even up 5 points. On March 9th, 2023, it was up 4 points. If we look at the stock market and our fundamental and technical analysis says, hey, the stock market's going up higher, and I want to buy on a dip, when are those dips? Those dips occur when the VIX is up 3 or 4 points, but not more than 5. Not if we believe that the stock market's in a long-term trend to the upside. Now, 5 is not a magic number, but if we start to see the VIX really accelerate higher, that certainly would be a cause of concern. But notice all the opportunities that we could buy low. When the VIX was up, let's say, December 12th, 2022, the VIX was up 2 points. The S&P 500 very quickly went down to 3783, and then within a couple days was at 4180. The VIX was up 4 points on March 9th. The S&P 500 was at 3856. In a couple days, it was back up to 4151. So the times that the VIX spikes does represent over the past few months, great buying opportunities, as long as we can ensure that it's not going to go up, in a parabolic fashion. Here's one more look at the VIX, which is the purple line. Now, this is the actual VIX, now currently right around the 15 level. And the magic level you really want to pay attention to is 20. If the VIX is between 15 to 20 or even 13 to 20, generally speaking, it shows us that the market is in a long-term steady trend to the upside. And we can see that the white line, the S&P 500, bounces up and down on a 20 simple moving average. And if we want to just, use a buy at the moving average type of strategy, buy, let's say, for example, going back to May 25th of this year, we had another return to the moving average, June 27th. It looks like maybe we're coming back down. Currently, the 20 simple moving average is at 43.90 on the S&P 500, especially because the 20 is above the 90 simple moving average. This shows us a very quiet market. But make a note, if we start to see the VIX up a couple points, 2, 3, 4 points, we should be aware, and we should always be aware if the VIX crosses above 20, this could be a sign of something else to come, so to speak. So again, we're going to watch this very carefully. It's not a huge sign today, but the intraday action certainly was very interesting. We hope this has been helpful. We look forward to seeing you back soon.